when you've chosen 5 stock out of that are your favorite and you think they're your best stocks that can make you win, then you post it online. You post a picture of the stocks that you've heard with the hashtag investment candle challenge.
If you have reasons, in fact, I'm just adding this now. If you've put some thought, hopefully you've put some thought as to why. Let us know your thoughts.
Yeah,
would like to read through some of the.
If you're interested in Capitec. If you're interested in Capitec, you chose Capitec, you're like, yeah, Capitec has got this growth, whatever. I'm not gonna say what what our investment thesis is, but it's basically that, right? I mean, it's not a mandatory, but if you feel like you want to tell us the reasons why you've chosen the stock, but I think I also want to add this. The winner will invite them onto the podcast.
Let's do it.
And then they will tell us how and they chosen the stock. So the competition will run for 6 months from the 1st of June until the 30th of November.
Correct.
That's 6 months, right?
That's 6 months.
Yeah.
Yes.
So basically the period is 6 months. And then if your stocks do a greater return than anybody else, guess what the prize is? The prize is 5,000 rands, you know? So if you are the best investor, yes, 5,000 rand cash into your bank account so that you can continue to invest and some more.
Or do whatever you want with it.
Do whatever you want with your money. But basically that is the big prize that is up for grabs for you. And I mean, the 30th of November, you literally receiving your money just into December, and
that 5,000 rand
it's gonna come very handy. It's gonna come very handy.
This is amazing, bruh. I'm
excited about this competition, man. I'm really excited to kind of understand how you guys are thinking about investment in the stock market, how you guys are doing this, like how we have helped you in any way, if we have, you know. So those are the conditions. I think what we're gonna do. Welcome, investors, to episode 15 of the Investment Candle podcast. My name is Chipiwa, known as Chief, and I'm not rolling alone. I'm rolling with Nico, as always.
What up,
How are you doing, man?
What's up, my man? Are you good?
Yeah, I'm good. Yeah. I was just saying that, look, you were saying offline that Sundance is better than Pirates, and I feel like a lot of investors will strangle you for saying that.
No, so what I was saying is that also clearly Orlando Pirates is the informed team at the moment.
Yes.
5 out of 5
of
the past 5 games.
Yeah.
And obviously Sundowns, it's 3 out of 5.
Yeah.
3 wins, 2 draws.
Yeah.
Clearly you all are the informed team. Yeah. So to say that Orlando Pirates is the informed team in South Africa, yes, I agree with you.
Yeah.
It's the better side at the not sure.
Look, we'll beat those guys 5-0 in the final. It will be something else.
Wow, you've turned it into an intelligent conversation to something. No, but like y'all, I've been just paying a bit of attention, not too much, but I've been paying a bit of attention. Y'all are playing good football.
Yeah.
I was asking you offline that where did it go wrong? Because clearly you shouldn't be number 3. Don't forget that you're number 3.
Yeah,
you're not even number 2. You're number 3.
Yeah.
Like where did it go wrong? In this
look, I think it's the thing about not starting well, right? I mean, we haven't started really well in terms of games. We started around. I think when we started the matches, the beginning of the season, it was win here, draw 5 games, you know, all these things, right? You lose a lot of points. Whereas Sundance really was just accumulating points from the start of the season, right? I mean, do you know that we were actually at the CAF last season and we crashed out at the preliminary times of the CAF? Yeah, you know, so
it's quite poor.
It's quite poor performance at the beginning. But Paris does this thing all the time, you know, like first half of the season, it's literally all over the show. And then the consistency comes at the end of the season. I'm like, what's the point? It doesn't count. It doesn't count anymore, man. Like, yes, maybe. And, you know, like, I feel like we take time to kind of get our way out of the woods, You know, so it's one of those things that, you know, we need to kind of hammer on it. Management at Pirates, if you're listening, I think this is the time, you know, like start preparing for
next season.
For next season as early as now, you know, like just make sure that you've got your ducks in the row so that if you making it, because obviously you're going to play either Confederation or CAF, one of the two, but at least make sure that
you're definitely playing in Africa, so you must prepare for Africa.
At least make sure that you go to the group stage, man.
I think my parting shot on Mamelodi Sundowns, as much as how I still think they're the best team in South Africa by some distance, they've had a failure of a season.
Yeah,
I really think so. So they can even go ahead and win the league. Well, they've already won the league, but I'm saying complete the league unbeaten.
Yeah,
which is phenomenal. But the fact that they crashed out, the way that they crashed out of the CAF Champions League, was it to Esperance or something like that?
Yeah,
that was quite bad.
Losing at home,
that's quite. And my thing, it's my last analysis of it is that I look at where Sundowns was under Pitso Musman. And compared to where they are now, they are better. They've got more quality, they've got more resources. But yet Pitso could go to Africa and conquer it. And here is lies Sundowns at the moment, and they're crashing out, and they keep on crashing out of the CAF Champions League. So
you're saying Rulani is not doing a great job in Africa?
I don't want to mention any names, even though I did. But yeah, mate. Those are my thoughts on Mamelodi Sundowns. It's gonna be a good. It's the final, the Nedbank Cup.
Yeah, it's the Nedbank Cup final.
It's gonna be a crack of a game. I'm gonna watch.
It has to be. It has to. We're expecting some top tier football.
It should be.
It should be. This is what South African football representation should be. That game.
My heart bleeds for Kaizer Chiefs. But let's move on.
And then what did you think about the semi-final of the Champions League?
No, like you said.
You're breathing through the wound, eh?
No, mate. Real Madrid, hey? I was convinced that they were going to lose that one.
I was not.
You were not?
I was not.
Where was the weakness in Bayern that you saw, especially when they scored?
They kept knocking. Look at the changes, right? Look at how tactical Carlo Ancelotti is. He brought in Modric. Modric is one of those people that is willing to take long shots of passes through ball. He's able to shoot from a distance. I knew that at least one mistake would be able to score.
I didn't see that mistake coming, though. I didn't see it, especially from Bayern Munich.
The thing about it is that Bayern started sitting at the back, and they forgot who they're playing against.
Oh no, it's not that, mate. I don't think it's that. Like with German teams, the big characteristics of German teams is that they don't make mistakes. So for me, this is the last team.
But this is Madrid.
This is mate.
You don't sit back. Did you see what City did? I posted I posted a video about when we did a comeback on against City in the last the 2 seasons ago against City, right? City had the game on hand, right? City is one of those teams that actually keeps on attacking until the last minute.
Yes.
But they didn't. That was the mistake, right? You let Madrid come at you, they're going to score. Out of nowhere, they're going to score.
I think to any piece of analysis that anyone can make when it comes to Real Madrid, it will always boil down to their Real Madrid. Right? and I take that fully on board. Where I was a bit shocked was that seeing Manuel Neuer make that type of mistake.
Yeah.
Absolute shock. I was in shock.
But that's a normal thing. The ball bounced.
Normal thing for German teams.
Yes.
No, mate.
No,
but I mean, watching German teams.
No, I've been watching Dortmund.
They don't make mistakes.
I've been watching Bayern.
If there's one country now.
But how has Bayern not been winning the Champions League then if they don't make mistakes?
No, those type of mistakes.
Yeah.
No.
How did they lose against Cristiano Ronaldo?
I think then they were just dominated. And I think in this case, if a team overwhelms you and overruns you, okay, it's fine. Bayern Munich were in this game. They just needed to keep discipline. A hallmark of the German person.
But then are you saying that because the way I see it, right? It was like a moving game, right? Madrid started when they started the first 10-15 minutes of the game. It was fast.
Yeah.
Like I'm telling you, and then Bayern then did their thing, and then Madrid did their thing. Look, even I remember I was watching Kimmich as well, right? Like Vinicius Junior was really like pouncing on him, like on that left-hand side. Like it was just some magical football, man. Like it was just something else.
You're a fat dog. You're a fan. Congratulations. Real Madrid, like I said, Real Madrid. Anyone can put their best analysis. If you're playing against Real Madrid, it neutralizes everything. So I totally. I think I was a bit sure.
But also, you know what for me, that's my parting comment, right?
Yeah.
What characterizes a winning team is the mentality of never giving up.
100%.
Never giving up. 100%. Remember the time of Leicester?
Yeah, Leicester City. Yeah.
Leicester City.
Yeah.
Leicester City was also winning games in the last minutes of the game because they never gave up. You know? So, and that's what Madrid does, right? They will fight you until the end.
Slight difference with Real Madrid and Leicester City. Leicester City, it was momentum. Real Madrid, I think it's a culture.
Yes, but I'm saying that it boils down to the same thing when it comes to the game. Yes, Real Madrid is the culture. It's been there for quite a while. It's the mentality. It's the football heritage and all those things.
It was a snowball that was, you couldn't stop it. Yeah.
But when it comes to the game, right, then you say like, shucks, guys, we're losing 1-0. We've got 3 minutes left on the clock.
Yeah.
We have to give it our all.
And then they end up scoring 2.
And then you end up scoring 2. And that's the rest is history. Anyway, on that note, let's go on to the portfolio check.
Are we starting with the portfolio check or making the announcement?
Okay, I think whichever way I'm happy.
Let's start off with the announcement and then we're going to get into... In fact, you're right, mate. I think let's start off with the portfolio check and then we'll get to announcements.
Okay, wonderful.
Okay, so with the portfolio check... We've had some stars and we had some dogs. So coming in at last place, unfortunately, I hope you get into it a little bit, is Discovery.
Yeah.
Discovery at the moment sits with a share price of 99 Rand and 88 cents. No, I'm lying. This is not the share price. This is actually how much we have.
Lost.
How much we have. We've lost
99 Rand. No. Yes, we've lost how much? 9 Rand?
We've lost about 24 Rand.
Okay. Cool.
Yes, which is about...
And what's the percentage loss?
19%. 19% roughly. About 19%, which is not great.
Yeah.
And then that is followed by Sun International. Sun International is at -10, roughly about 10%, minus 10%. Then we have British and American Tobacco at minus 8.2%. And then we have Anglo Platinum, which I'm sure you're going to speak about, which is at minus 5.15%. I'm actually quite impressed with Anglo Platinum. The way that it has come back.
The recovery.
The resilience of Anglo has been amazing. It's been quite good. And then we have Naspers. We have Naspers at plus 10.7%. So roughly about 11% gain in that. Remember, this was red for a very, very long time.
Naspers. So, is it green now?
It's green.
Oh, wonderful.
Plus 10.
Plus 10%. Yeah. Wonderful. Bravo to you, mate.
No, I'm going to chat a little bit about that. That has to do with an announcement in China by Tencent.
Okay.
And then we have ShopRite, still green, has lost a bit of ground, but still green at positive 14.67%.
Imagine, going back to football a little bit, right? Imagine you saying that Sundowns didn't do well. It was a failure of a season, but they won the league. They're on the verge of a cup final. They went in the semi-final. It's kind of what we expect of ShopRite, right? I mean, we expect this big returns.
The standards are high.
The standards are high for different people and different companies, I guess. Yeah.
Fair. And then number one by a long way is Capitec by close to 50% gain. It's a 47.59%.
Wow.
Yeah, no, it's been
when we entered.
And this
Bravo
is
to you. You're winning this portfolio, bro.
but it's quite nice though, because this 40, it hasn't even been a year.
Yeah.
And these are the sort of gains.
And we're at 47%.
Yeah, we're at 47%.
Of the company that would
7%.
Wow. Wonderful, man.
No, it's fantastic. In fact, like, let me start with Capitec.
Okay.
I just took a bit of notes. I took some notes here. In fact, I took some notes. So if you want to have a look at a nice brief on the Capitec announcement, on the earnings announcement, you go to the Investment Candle podcast. We put together a small reel there.
Oh yes, yes.
That hits.
That's some really good content that you've created there.
Yeah, but it's quite cool. So some of the headline numbers is that Capitec has increased its client base from roughly about 20 million last financial year to 22 million. So they've increased by 2 million. I was asking you offline.
Let's do a back of envelope calc, right?
Yeah.
So you've got 22 million. We've got how many people? 62 odd million people in South Africa, right?
Yeah.
So Capitec carries about 35% of the country's population.
A third of South Africa's. I mean, it's epic. Like,
wow.
I was saying before, the growth matrix of this company is very much likened to a high growth tech startup.
Yeah.
I can see where management is, and it's a bank. But I really like the culture. I've had the opportunity to interact with some of the board members and some of the executive management. The culture is very much similar to Discovery, but they also have a bit of culture of rather staying true to what they are at heart, in that they are not a technology company, they are a bank. So they have that ShopRite culture that we are a grocer. But we will embrace technology. We will push the envelope when it comes to coming out with new products. But at the heart of it, we are a grocer. Capitec knows that it's a bank.
But do you think they've reached a ceiling when it comes to growth in the lower end of the market?
Of course, and they know it as well.
Okay.
So I think this speaks to the point of them trying to diversify their income.
Into the business aspect.
Exactly, because like in the formative years, they were really targeting the unbanked, but now they're rejuvenating their focus on fully banked clients that are looking for more sophisticated services, and not just individuals, but also businesses as well.
When was the last results announcement for Capitec?
It was about 2 weeks ago.
And did we see how much how well was the business banking doing? Did they separate the results as to the segments, the business bank that they bought?
Good question. I will get that to you.
Okay.
Yes.
Wonderful.
I'll get that
to be good to kind of know, what Mercantile Bank, now Capitec Business Bank is doing.
Yeah.
Okay.
Yeah, but that's roughly it.
But bravo performance, man. Like, that's
good performance.
You deserve a handshake.
Thank you. Thank you. And I think what's also worth mentioning is that a big portion of the earnings has been attributable to the high interest rate environment.
Yeah.
So we must not fail to mention that. But I think where the crux is the risk management, and that is the impairments on their loan book, which they were not free from that. But across all banks, it's just that as far as managing their loan book, they've managed it a bit better than other banks, which the market has approved of that risk management. And I think it's onwards and upwards. But as far as that lower market is concerned, I think the runway there is short. So now the business has to look at diversifying its income stream. Yeah,
I was just thinking when you're mentioning interest rate, high interest rate that we currently in, that a little bit sticky.
Yes.
Is that on the insurance business, it's quite the opposite, right? I mean, when you've got a high interest environment, you've got customers and policyholders cutting back on their policies and kind of like foregoing their policies because it's becoming a little bit expensive, because you might find that they've got a credit card, they've got a bond, they've got all these different things that now the cost is going to increase. And now to save costs, they cut all these other things that they think they don't need. And obviously they're going to cut an insurance product, right? And as a result, for insurance companies, it's a bit of a double-edged sword, right? I mean, if you have a high inflation environment, which is accompanied by high interest rates, right? Which that's what has happened in the past in the past year, 12 months or so.
Post-COVID.
Yeah. What happens is that people have to use their disposable income more towards their domestic expenses.
Correct.
And that means that now they need to cut further again. So they need to service debt. They need to incur their living expenses. So the inflation and interest rate kind of like affects the insurance industry it's like a double-edged sword. Like wherever they touch, it's a tough thing. But obviously they kind of increase their policy pricing, right, with the inflation. So whatever the inflation is, I'm sure they are able to just on charge it to the policyholders.
Yeah, to policyholders.
For those that are able to stick around with the insurance product, then it means that, you know, they're able to kind of recoup and recover the inflation in that respect.
You're right.
Maybe in that sense, I might as well just speak a little bit about Discovery.
Sure.
I think that is exactly what Discovery said, that their results are impacted by, you know, the inflation and high interest rates. But they came out with the numbers about a week, 2 weeks ago, wherein they've got group earnings which grew at 13%, which is quite good.
Group earnings grew by 13%.
Yeah, group earnings grew by 13%.
Robust.
Normalized earnings, headline earnings, it's up by 11%. You know, it's really good numbers here. Embedded value as well grew by 12%.
What's embedded value?
So embedded value is basically net asset value plus future profits they're going to earn on the current existing policyholder value.
Oh, okay.
So what it doesn't include is the possibility of kind of writing new business. So, you know, with insurance business, right? They they have got all these policies that are up that they have now, existing policies. Yeah. So what they do is that they take that existing policy at a point in time, right, and project what the profits are going to be in the future, discount that back to today, and add that into the NAV. Yeah.
And that's the embedded value.
That's the embedded value. So it's kind of like a tracking mechanism for, you know, performance for insurance companies. Yeah. So that has improved as well.
Would you say for shareholders that have insurers within their portfolio, that's a good metric to compare the performance of insurers?
If anything, I think it's even much better than a PE ratio. You compare embedded value to price.
Yes.
That ratio, you track that ratio to kind of how much are the investors willing to pay for each rand of embedded value of a company.
Wonderful.
Yeah.
Wonderful. Absolutely wonderful. Cool.
But overall, good results from Discovery, but the share price has not positively reacted to that. I don't know what the disconnect is.
Yeah, so I have a view on that. And yeah, we spoke about it a bit offline about why I think prices across the board. Obviously you do get green shoots such as your Capitex, your ShopRites, and more recently your Naspers. But I think across the board, South Africa's equity market is so cheap. It is so cheap.
Yeah.
And it's a great opportunity for those who have enough liquidity to withstand this barrenness. And I think it's been influenced it's going to be determined by the interest rate environment.
Yeah.
Particularly in the United States. I don't know. We've been speaking about how sticky inflation has been. So
basically, I guess is what you're saying is that the whole entire stock market is basically at a discount.
Yeah.
Which could be explainable in the fact that if you've got a high discount rate, right, due to high interest rate that people are baking in to be sticky for a long time.
Yeah.
So then if you discount your cash flows with a high discount rate, then it means that you get a lower value.
Of course. And I think that's what's happening.
Yeah.
I think that's what's happening.
So we're seeing high interest rate discount rates to kind of get to that fair value.
But it's an opportunity. It presents an opportunity. But this opportunity is going to be taken by those who have enough liquidity to withstand this time of stickiness.
Yeah.
If you don't. But if you can withstand it, I think it's a good time to actually come in. And should that change, I don't know when it's going to change. I don't think anyone knows where it's going to change. I don't even think the Fed itself's knows when it's going to change. But when it does,
but I feel like inflation is under control. I don't know why the reserve banks all around the world are not. They're a little bit too conservative in terms of cutting the rates. I mean, it's a macro discussion that we can talk about, but look, in my opinion, I feel like inflation is under control globally.
Well, okay, what do you measure under control? Because in South Africa, we have a number, we have a metric,
we have a target.
We have a target range.
Yeah.
So to say that, okay, once it's here,
I mean, even the US targets around 2% of the inflation.
It's 2%.
And it is 2% now, roughly.
No.
Yeah. Okay. The last inflation rate was around 2%.
Is it?
Yeah.
Okay. Inflation rate in the USA. Yeah. No, we're like, inflation rate is at 3.48% in the United States.
When was that release?
This was April 2024.
Okay.
Yeah, but so like it's not there yet, bro. And I think that's where we talk about the stickiness of it, is that it's taking longer than expected to actually drop into that range where...
Fair enough.
Yes.
Fair enough. But yeah, look, I think... In my opinion, I'm
glad you're not a policy maker, bro.
No, I mean, look.
Yeah.
At some point, we have to also think about.
Yeah.
Given the current state of the economies globally, the way that it's so fast-paced, etc., given the technology, whatever. Because I mean, we live in a very fast-paced world.
Yes.
Compared to 10 years ago, right? Obviously, things like inflation is going to be, do we need a new target? Those are the things that we need to have a conversation about, right?
But I don't think that's a political discussion, though.
No, I feel like that's a fundamental discussion.
I think deep in the heart of it, that's political.
Because, I feel like that's a fundamental discussion, given the industries where they're going. I mean, technology has impact on each and every industry, isn't it?
Yes, it does.
Yeah, and with that comes... the pricing impact as well.
Are you telling me that we must now shift to a world where we can, because of technology, we should expect higher inflation? Is that what you're saying?
I'm saying that maybe we must review the policy around inflation in terms of inflation targeting, because there hasn't been any review on that, and the economy has not been the same ever since we set that target of 3 to 6%.
The reason that our economy, in our view, and specifically in South Africa, the reason why we were able to withstand a lot of COVID's blows was because we have been so disciplined, or rather the South African Reserve Bank has been so disciplined in its target so that it created room for itself to drop interest rates. If it did not have that, mate, we're in trouble. I'm saying that I'm not saying it's perfect, and obviously like this thing here, I think it's set by...
No, you lost me on that point.
What do you mean?
On the point of COVID, just come again on that point of COVID.
So, at the point of COVID, we saw that the Reserve Bank cut rates.
Yes, correct.
Big time.
Yes,
right? They were cutting almost every time. They were even moving meetings just to cut.
Yeah, but I don't think that was a fundamental...
The reason why they were able to cut, it's because they had a conservative approach before COVID of keeping interest rates uncomfortably higher. Yeah. So that it gives them space for them to drop. Now, I'm saying...
But how?
I am saying...
Yeah.
Let this conversation be determined of how we feel about inflation. I say inflation must determine the direction of interest rates.
Okay, fair enough. But I mean, one other aspect that we've spoken about was the drive of that inflation. I mean, it makes sense if inflation is high due to the demand led, but if it's cost related, then it's a very different discussion.
What are you saying?
Because I'm saying that when you try to raise interest rate, you're actually managing demand. You're not managing supply. You know? And because of that, you're actually making supply even much worse than it is. Because the increase of supply cost is going to increase.
If you were the governor of the Reserve... Okay, no. The governor of the Reserve Bank, if you had it your way, how would you like our monetary policy to be determined? Because you clearly have a problem with our inflation targeting.
No, I don't have a problem with the inflation targeting. I'm just saying that there has never been any discussion around, does this actually reflect the view of how the economy works in this day? That's my point. There's never been any discussion around that. I'm not an economist, right? I'm
also not.
I'm not an economist, but I'm saying that at least if we can have that discussion around the table to say, the target of 3 to 6%, specifically to South African market, right?
Yeah.
Is that reflective enough of South African economy in terms of targeting inflation? We've got energy problem. That's a supply problem. That's not a demand problem. And that actually pushes the price, right? Because if it's gonna take you,
I'm following.
If it's gonna take you 2 times to produce something because the energy pricing is increased because you're now using diesel instead of electricity that you're getting, then it means that the price that you're gonna put as a retailer or whatever, it's gonna go high. Because you're trying to recover the cost that you have, right? But that's not because people are spending too much money. That's because of a supply.
I understand. I just think maybe I'm not sure what your final product. What do you want to do? Do you want it just to be a conversation? Because the conversation must lead somewhere.
Yes.
You mentioned
but I mean, I don't have to have an end product. I'm saying the experts out there, at least they must have this conversation.
No, I think that conversation is happening.
I don't think so.
Well, okay. Obviously, like if you look at the ground, like you said, people are not really engaged to this level as we are.
Yeah.
But I think by mentioning load shedding, which has been a failure, from us, and saying that,
which is one example,
which is it's a big example, but it's one example. You're right.
It's one example.
Yes, it's one example. If that is now going to determine how we set monetary policy, I'm scared.
No, I didn't say it has to be.
I'm very scared.
No, I didn't say
but you mentioned it. You mentioned it to prove your point.
It's one of the things that are specific and unique to South African economy. And that's why we have the South African 3 to 6% band target, right?
Yes.
Because we took in whenever
our idiosyncrasies
at the time of setting the target band, right? Of 3 to 6%. They looked at it, they're like, okay, our South African economy, that's why it's different from the US.
Which is 2.
Which I think it is 2. I don't know. I think it is 2.
No, the target is 2.
Yeah.
Yes.
And
for
full
example,
employment.
2 and full employment.
Yes.
That's the mandate.
For the target, say it's 2%. It's different from South African context, but they looked at South African specific context, right?
Yes.
So that's what I'm saying. That has that conversation been revisited to say, given where the South African economy is, and given the fundamentals that makes up the economy and the drivers of the economy, where should the price targeting be in terms of managing that price?
Yes.
Right? And also, given the embedded issues that we have that are on the supply side, how can the Reserve Bank, in managing that inflation target, take into account the supply side? Because inflation is driven by both. It's driven by supply and demand. And they know that. The economists, they know that.
So what my understanding of the Reserve Bank is that they are driven by inflation targeting because that is embedded in the Constitution, right?
Yes.
So in the beginning, I mentioned that that's like what you're saying is a political conversation.
Yeah.
In order for you to change the Constitution, you need 2/3 majority in Parliament. Obviously, in order for you to get that, you must get a mandate from the electorate, right?
I don't think the target band is necessarily a constitutional issue.
What do you mean? Like
the 3 to 6% target band, I don't think it's a constitutional issue.
My understanding.
The overarching mandate, yes, they're given mandate to manage the inflation.
Yes.
But coming up with an inflation target is not a constitutional issue. I wouldn't think so.
So then I'm genuinely asking, when was the 3 to 6 determined?
I don't know. But it's clearly not the time when I was smart enough to know.
Mate, I think we're gonna have to move on. We're gonna have to move on from this. I even forgot which no,
business. you were talking about in Naspers. You were moving on to
Naspers. Briefly, because like we must get to more important things. Briefly with Naspers. So we've seen it. It's made a strong comeback. It's hit a 52-week high. Tencent has actually hit a record high. Not a Tencent process in Amsterdam in the Euronext.
Okay.
Which has been great. And obviously a big portion of their value generation is tied to what's happening in China in the form of Tencent. Tencent made a very nice announcement. One of their most popular games, it's called Dungeons and Fighters. And they announced that that's going to be available on the mobile platform itself. At the moment, it's only in computers, desktop. So now that's going to be available. In fact, from next month, the end of this month, it's going to be available on a mobile platform. That boosted a bit of, and also I think China's standpoint. I don't understand how the Chinese make policy. I think it changes. I think it's inconsistent.
They can just make it overnight, those guys.
They can, and
they wake up and be like, it is what it is.
And it's a prerogative. But I think what we're seeing, it's the sentiment in the market that has to do with policy setting around video games has been relaxed. And I think it has been for this 2 months.
Oh, is it?
Now,
because I remember they had passed policies around even managing the times as to when kids of certain age can access games and play games and stuff online.
It's true. So like where I see now where my reasoning as to that has somewhat relaxed a bit as to how long it will be, I don't know. Because when Tencent announced this, they didn't get any pushback from the government.
Okay.
Now, changing a game from desktop to mobile, you are automatically making it widely more available.
Yeah.
And the lack of pushback there kind of signaled to me that, okay, there is a sentiment change in that we are relaxing our tough stance on entertainment in the form of video games. That obviously had good consequences for Naspers, and that's why we're seeing Naspers rally like this.
Okay.
But that's briefly. I wanted to get into Anglo. Your company, because a lot has been happening. Yeah, in fact, just like
Anglo Plat. Yeah, I think
Anglo Platinum just for
Yeah, it's not just Anglo-American. Yes. But I think what we've seen in the market is that there's been quite a lot of consolidation when it comes to industries. I mean, we've seen a lot of big players buying small players and, kind of consolidating that market. I think just given the South African context, right? And this is from a broader perspective, in my opinion. Given the South African context, I think we're still going to see a lot of consolidation in the different industries, purely because the cost of doing business in South Africa is quite high.
Yes.
And because of that, you find that only big players are able to absorb that cost of doing business, but small players are unable to do so, and they struggle, not because they are not able to grow, but because the cost of doing that business is too high for them to actually be able to tap into that growth that is needed for them to be a big player, right? And it's quite a shame, right? It is quite a shame. But be that as it may, it's not like Anglo-American is a small player. It's not a small player. It's not a small player. But I feel like it's more of a strategic discussion that we're having here. It's not more of a consolidation in a point of consolidating small players. But even though it is a consolidation, but it's a more strategic consolidation rather than a necessary one when you have to acquire a small player to tap into the resources and all of the likes. So BHP came out to offer about 31 billion euros to acquire Anglo-American and specifically scoped out Kumba and Anglo Plat, right? And say that those assets are unattractive. I disagree, respectfully.
I also disagree.
Respectfully. And there's been quite a lot of uproar in the market and also in the streets, Gwede Mantashe came out to say BHP's merger with Billiton, South African company, has not been quite useful and beneficial for South Africa. So why should they be able to be allowed to acquire Anglo-American, as we've seen in our experience in the past, that they've not benefited South Africa in that respect. But a lot of shareholders, private shareholders like Alan Gray, Coronation and the likes that actually own a piece of this, they were quite supportive of it.
Really?
Yeah, they were quite keen on it. I mean, they're investors. If they can cash in, they can cash in. But I think the pushback really, even from the management, was that they undervalued the company. So the price that they're offering it's a little bit of at a significant discount that the management believe that the company is worth. Right?
And just for clarity's sake, as the price that was offered compared to what the price was, the price of Anglo, it was technically at a 31% premium.
Yeah.
But obviously we're speaking about the embedded value.
Yeah. I mean, look, it definitely is. They're not gonna come and say we offering you at a discount of what is currently listed, because otherwise they could have just said, you know what, it's fine. We'll just buy back and cancel the shares, right? Which is something that is happening at BET. Anyway, I'll have a discussion on that.
Yeah.
But so there's been a lot of welcoming the investors that have quite significant stakes and influence on Anglo. They've been welcoming this, but they say the only differentiating factor is the price. They're just saying that everybody can sell at the right price. Basically, that's what they say.
It's interesting.
Yeah,
it's very interesting. I mean, yes, Gwede Madashe came out on our side. There's also is it Masisi or Asisi from Botswana? He also came out and he says that he would like to see this, or rather, he would like to protect the interests of Botswana because they're so closely tied with De Beers and Anglo that I'm not sure what it means as to whether he would support some sort of a deal or not.
Yeah,
but politicians are also getting involved. I have a somewhat political view about it.
What is your political
My
view?
political view about it is that it's not nice seeing these corporate bastions of South African enterprise, seeing them being bought out like this.
But is Anglo American a South African company?
Well, okay. This is how someone asked me this question and how I responded. I said, the founding family of Anglo is South African. They live in Johannesburg. They listed. This company is got a dual listing, but it's got a listing in Johannesburg. We've got a lot of shareholders in South Africa. We're doing a lot of business in South Africa. They've got big operations in South Africa. So as to whether it is a South African business, I don't know how to answer it flat out. There's nuances.
Yeah.
So I say that it's an international company with deep South African heritage.
Okay, that's a fair answer.
Yeah.
That's a fair
But
answer.
it's not great because Imperial, South African breweries, hey, they're all being bought out, man.
Yeah, like I said, anyone can sell at the right price, right? If it makes sense for you to exit, you're gonna exit, and we'll see a lot of. I mean, South African has a lot of potential when it comes to growth, but what is actually impending that growth is the underlying issues that South African economy has.
No, you're right.
But
you're right.
For you, it's not like you can't grow. You can grow in the economy, just that it's just going to cost you more. But if I'm coming with my dollar,
no, it's true.
I'm going to be able to pay for that growth.
Bro, I'm not trying to insinuate anything here. What is stopping an AT&T from making an offer to MTN?
Exactly.
I mean,
nothing is stopping that.
Nothing, and their currency. I think this speaks. We're heading to an election year. I promise I won't get more political than I am at the moment. We're heading to an election year. Man, this economy. A lot of the reason why we're seeing that the prices are being discounted is because of the country risk, which is baked into a lot of these prices.
Yeah.
Man, the economy must get better. Hey.
Yeah, look, and I think I can agree that you're saying that the equity market is at a discount right now for various reasons.
Yes, many.
I can definitely agree with that. Funny enough, Eskom came out to say, today we're talking about SOEs, but anyway, it is what it is. Eskom came out because we haven't had load shedding for 40 days, right?
Yes.
So Eskom came out to say, a lot of people were, including me, are saying, these guys are banning diesel. There's no way they just out of nowhere created this capacity of energy somewhere.
Yeah.
And then Eskom came out with a statement to say that they have improved their energy availability factor.
Yes.
So energy availability factor is basically that it's total potential energy that can be provided.
Yes.
So, for example, if all of Eskom's fleet was online, right?
Yep.
Then that's the possible maximum energy, right? But there's been a lot of breakdowns in all this power stations, etc., right? So the energy availability has been at around 55%, right? In the past, I don't know, in the past 6 months, 12 months, whatever, that we have gotten to stage 6 of load shedding. But right now, Eskom came out to say that the energy availability factor in the past 40 days, it's been in the range of 65%.
Wow.
That's like a 10% improvement.
Wow.
And they're like, they try to justify it in there. But I saw a post, right, about their budget, the diesel budget.
Yes.
In 2024, Eskom has spent the diesel budget that is equivalent to the 2023 12 months budget.
You say that again?
Just 4 months.
Ooh. Yeah.
But better yet, there's like, no, we're not banning diesel and all of that. Fair enough. And then they'll be like, no, we have had a budget of, I think they said, I can't remember the statement. I think I have it somewhere. I can open up. I think they said they have a budget of about, is it 1.6 for the quarter or something? 1.6 billion or something for the quarter, right? And they were only spent about 900 million or something. And then I'm like, this is quite convenient, right? I mean, the only factor that you can do is you can increase your budget and say we are under budget. Right? I mean, that's also a factor, right?
You can't do that, yes.
Yeah, and be like, no, we have, because they're saying that in the 2024, they're under budget. But I'm like, okay, let me see the budget first and how it relates to last year. Right? Because, I mean, you can just basically double the budget and tell me you're under budget, you're doing well. I mean, that's not it.
No, I hear you. And I think like what I take from what you said, you're right. The energy availability factor, which I think is a good metric to track as to how we're performing energy wise.
Yeah,
it's a good one. That has improved.
Yes,
I'm very happy about that.
Yes,
as to how it's improving, we're burning diesel, and it's true. But yes, like I'm enjoying having electricity.
Look, for a consumer out there, look, I'm not complaining. I'm not complaining for not kind of scheduling around my time and all of those things. I'm really not complaining. But all I'm saying is that we will see after elections, they'll be coming up with stories and all of that. But also, the average life of Eskom's power stations, they're quite old.
Yes, yeah.
It's probably in the range of 20 years, right? I haven't calculated it, but it's probably in the range of 20 years. Like, think about it. Let me make this analogy. Think about it this way, right? You have a car that you've bought about 14 years ago, right? It keeps breaking down, right? Yeah. And then you keep doing that and keep doing, kind of fixing it, right? The question is, do you think you can rely on that car? Because it's old. Right? It's old. So it's going to keep on breaking down. Right? So that's what's happening. So no matter what Eskom does in terms of fixing the plants, they're old.
It's an old car.
Yeah. There's nothing they can do to actually make it function like it used to. That's not how it works. Like, even when you get old, you're not going to run the same. You know, Ronaldo is not going to sprint the same like it was when he was in 20s. But anyway, let's move on. What's the next company anyway?
The next company that I said we were going to discuss before we get...
So, that was my kind of discussion around Anglo-Plat, right? That we've seen all of that. And Anglo-Plat has recovered quite well.
Yeah.
I mean, even in our portfolio, it's doing a little bit better.
It's doing much better.
And it's in the green, eh?
Not yet in the green, but I mean, from the pounding that it was taking in the beginning, now it's much better.
Yeah.
And then the last one before we put a close to a portfolio check, before we get to a big announcement, is British and American Tobacco.
Yeah, I think one thing to mention there on BAT is the guys came out. I think last year they announced that they're doing a share buyback. So a mechanism around share buyback is that management believe that, one, they either believe that the company's securities or shares are actually undervalued.
Yes.
So they buy it back themselves and issue it at the point where they feel like, you know, it's at the right price, whatever.
Yeah.
Or another thing is that they want to reduce the number of issued shares.
Yeah.
They can also do that, but also they can also buy back shares to also create an incentive scheme for the employees.
Yes.
Right. So there's a number of reasons why companies can buy back shares.
Yes.
Right. So what BET said was that they want to return money to shareholders. right? Which is another mechanism. You can buy back shares,
you
right?
That, yeah.
You can either issue a special dividend, you can buy back shares, you can do whatever you need to do to return money back to shareholders. And I think the target now, it's about 1.6 billion euros, I think, if it's not dollars. I can't remember the exact science or the exact quantum, sorry. So what's interesting about it is that they are buying those shares in order to cancel them. So basically, they're literally reducing the number of issued shares in the company. And that mechanism is
Isn't that
ongoing.
artificially just propping up your share price?
Well,
yes.
Legally, basically, yeah. But I don't think it has that much weight in terms of pumping up your share price, because all you're doing is literally buying it at cheap and canceling it. And there's no really fundamental that you're doing in terms of that, right? It's not like that magically increases your earnings and everyone wants to pay more for your earnings. So it doesn't.
So
right?
like when I say artificially here, I'm literally, it's obviously it's not going to increase your earnings. That's more fundamental, as you put it.
Yeah.
But like, because you're creating more scarcity for your shares, won't that have an
but I mean, the stock market is quite liquid. I mean,
it is.
Especially for bet, right?
Especially for bet, very liquid, very liquid.
Bet stock is quite liquid, so you wouldn't have issues in terms of buying and selling the share. It wouldn't necessarily be scarce. Right. So that's basically what I wanted to mention on bet. So that's the mechanism they're doing. They're returning money back to shareholders and then they're reducing their number of issued shares.
Question. So if a shareholder, if any one of the investors here, if they own shares in companies that want to engage in a share buyback, should they be celebrating or should they be crying?
Well, I mean, it's a signal that the management believe that, like I said,
it's undervalued.
They believe that it's undervalued, but also even if they don't believe it's undervalued, it's just another way of returning money back to shareholders. So it doesn't necessarily signal it's undervalued. Yes, I mean they would want to pay less for their shares so that they can return money back to the shareholders at a less price, but it doesn't necessarily signal that, right? But in this case, I think the reason is more to kind of reduce the number of shares and also return money to shareholders. With that ends this. We've got a big announcement.
A big announcement.
I think I don't know where Matt is. He should have given us the drum roll, like
Mate, go for it.
But anyway, so we have decided. I know we've been talking about this since we launched the podcast. I think from day one that we're gonna have a competition. So we have worked around the mechanism of what the competition is gonna look like.
Yeah.
And the competition is going to be called the Investment Candle Challenge.
Say it again.
Right? The Investment Candle Challenge. So the Investment Candle Challenge, how it's going to work is that we're going to launch it at the release of this episode, but you've got until the 31st of May to select your stocks that you want in the JSE. So we're limiting it to the JSE.
Yeah.
And we want only 5 top stocks of yours. How you decide that, we have chatted a lot. Go watch the previous episode on how you select a stock.
Yeah.
When you've chosen 5 stock out of that are your favorite and you think they're your best stocks that can make you win, then you post it online. You post a picture of the stocks that you've heard with the hashtag Investment Candle Challenge.
If you have reasons, in fact, I'm just adding this now. If you've put some thought, hopefully you've put some thought as to why. Let us know your thoughts.
Yeah,
would like to read through some of the.
If you're interested in Capitec. If you're interested in Capitec, you chose Capitec, you're like, Capitec has got this growth, whatever. I'm not gonna say what what our investment thesis is, but it's basically that, right? I mean, it's not a mandatory, but if you feel like you wanna tell us the reasons why you've chosen the stock, but I think I also wanna add this. the winner will invite them onto the podcast.
Let's do it.
And then they will tell us how and they chosen the stock. So the competition will run for 6 months from the 1st of June until the 30th of November. Correct. That's 6 months, right?
That's 6 months.
Yeah. Yes. So basically the period is 6 months. And then if your stocks do a greater return than anybody else, guess what the prize is? The prize is 5,000 rands, you know? So if you are the best investor, yes, 5,000 rand cash into your bank account so that you can continue to invest and some more.
Or do whatever you want with it.
Or do whatever you want with your money. But basically that is the big prize that is up for grabs for you. And I mean, the 30th of November, you literally receiving your money just into December, and
that 5,000 rand
it's gonna come very handy. You know? It's gonna come very handy.
This is amazing, bruh.
I'm excited about this competition, man. I'm really excited to kind of understand how you guys are thinking about investment in the stock market, how you guys are doing this, like how we have helped you in any way, if we have, you know. So those are the conditions. I think what we're going to do, Nico is a great guy that is very good at visual things. So he's going to create a poster and then we're going to put it up for you guys so that you can follow the steps on how to actually post. So you post on 3 social medias. You post on TikTok.
Yes.
You post on Instagram.
Yep.
And you post on LinkedIn.
With the hashtag
investment candle challenge. So that's how it basically works, you know. Did I leave anything?
No, you did not. Please get involved. The total return, it includes capital gains as well as dividends.
Yes, okay, basically. So we'll assess the return based on an overall total return.
That's it.
That's it. I'm looking forward to this competition. But anyway, let's chat about Cody. Yeah, I think I was telling you that I saw a post on X, now Twitter.
Yes.
That Ntabeleng Likotsi, the woman that
names.
I mean, she's well known. Anyway, it is what it is.
Yeah.
So she came out, I think she posted something about the Reserve Bank came out to say that they're guaranteeing deposits of up to 100,000 for each and every bank depositor out there. Yes. So I posed the question to her. She didn't respond, of course. But I posed the question to her. I'm
salty,
like,
bro.
Huh?
Continue.
I'm not insulted. I'm just saying. I mean, she doesn't know me. I mean, I'm nobody. So that's why she couldn't respond. But anyway, so I posed the question to say, who actually incurs the cost on this product? Because it's an insurance product, so that means someone else out there is paying a premium. Yeah. And I think Nico, with his insightful research, he was able to get that answer for me. I made you want to touch on that.
Yes, my insightful research consisted of a Google search. So the question is where...
First thing first is, what is Cody and how it's going to work, etc. If you can do the quick rundown on that... in terms of reading it, whatever it is that you've got.
So basically, Cody, it's an acronym. Many financial stuff is based on these acronyms. But Cody, what Cody stands for is the Corporation for Deposit Insurance.
Yeah.
It's basically a deposit insurance scheme for bank deposits. Meaning that if you have got money in the bank, if you have deposited your money in any South African registered bank, whether it's South African born or whether it is a foreign bank that is doing business in South Africa, as long as if you have got a deposit within that bank, then your money up until 100,000 rands is completely covered by this deposit insurance scheme, which is managed by the Corporation of Deposit Insurance, Cody. That's what Cody is. And to answer the question, and where I'm getting all of this content is the Reserve Bank website, of which that's where Cody is going to be housed under, the South African Reserve Bank, of where is the financing coming from.
Yeah.
Depositors don't make any payments to Cody. Cody will use the DIF to protect depositors in an unlikely event of their bank falling in by giving them reasonable access to their covered depositors. So basically, this fund, the DIF, is going to be where the money to purchase these products, to finance these deposit investment, not investment, insurance products. That's where it comes from.
Yeah.
And I'm sure your next question is, where is the DIF getting the money from?
Exactly.
Yes. So the DIF will be funded through a monthly premiums from the banks. From the banks themselves. So the banks, let's say, for example, Standard Bank. If you have a deposit with Standard Bank, understand that Standard Bank is making monthly premiums, payments to Cody for that same insurance to kick in on your deposit at Standard Bank.
Yeah.
That's what's financing it.
No, I think, look, because I was worried that taxpayers' money is going to be used for that, right? I mean, if the banks themselves have to pay the premium, I'm happy with that, right? I'm happy with that. But now the question is, or my observation is, that charge of premiums that the banks have to pay, because that eats into their profits, right?
Of course.
They're going to on-charge that into the depositors.
Most likely. Yes.
How the mechanism is going to work, whether they're going to increase the existing fees, whatever, I don't know.
Yeah.
But I truly believe that cost is not going to be borne by the bank's profits itself.
Yeah.
It's going to be borne by the depositor ourselves. I mean, I've got deposits with a couple of banks, so probably that's where I'm going to be like, oof.
But you're going to be protected, bro.
Yeah, fair enough. I'm going to be protected.
Yeah.
But
under
still,
the unlikely event of a bank failure, and if your deposit.
Yeah, but look, I don't think the cost or the premium per se. I don't know how actuarial people work out the pricing around insurance products.
Yes,
but I don't think for a South African bank. I mean, we've got a very strong banking system in the world.
Very resilient,
right?
Resilient.
It's even much more sophisticated than the US banking system.
Yeah, we mustn't use the word sophisticated.
It is. You know how difficult it is to actually do an electronic transfer in the US. You can't just. It is a funny thing, but you can't just literally like go freaking send the money from one bank to another like that easily as that. You know, and they still pretty much use check method.
Yes, they do.
Yeah. So that's what I'm saying, that we're very much sophisticated.
No, it's a good system.
And we've got a very resilient banks in South Africa, right?
Agreed.
So I don't think that deposits are at a much risk, right? Unless
a VBS happens.
Unless a VBS happened,
which it did.
Right? Which it did, but I don't think, given the big six that we have, or the big five that we have, I don't think amongst those, I mean, Capitec has 35%, say, I don't know if that's the market share. It's not the market share, but it's kind of like the number of things, right?
Yeah.
So because of that, I don't think depositors' money are at risk with those strong banks that we have. So the cost of that shouldn't be too high.
Yes.
In my view.
I agree.
My view, it shouldn't be too high.
No, and it shouldn't. I just think, which I think you know and you understand very well, the importance of insurance.
Yes.
The reason why you have insurance is for unlikely events.
Doomsday.
It's for doomsday, and so it does happen sometimes. For example, VBS. It's a nice thing that with VBS that a lot of the depositors were, I think roughly about 98% were recovered all of their funds.
Yeah.
So I think the 100,000. Is it the end point, the limit? It covers roughly about 95% of South Africa's entire depositors base, which is fantastic. I think it's good. It draws confidence into an already resilient banking system, as you said. I think this is good, bruh.
This is good. I think it's an extra layer of protection. I mean, we do have a regulatory protection in terms of what's that mechanism that is in terms of what's that money that they reserve as a bank when they need to have I forgot the term.
Oh, what's it called? It's liquidity and capital adequacy buffers.
Yeah, something like that. But there's a specific term that I was looking for. But anyway, I'm not a banker.
Is it? I talking about the Basel stuff.
No, I mean, you know, when you're creating a money multiplier, right? Money multiplier in economics.
Yes.
You kind of divide by that something. What is that something that you divide with?
Something.
Look, man, we can Google this thing.
Ah, man, I remember it.
Yes.
Flip.
We can Google this thing. But anyway, guys, I'm not a thingy, an economist.
This is embarrassing me. I remember doing this thing in second year at UJ, bruh. An ecos.
Yeah.
Okay, that thing. Yes. No.
Reserve ratio. I did say reserve.
Yeah, man.
Yeah. So the reserve ratio. But anyway, it is what it is. I'm just saying that we've got a couple of layers of protection when it comes to the regulation in terms of, you know, they need this certain amount set back so that in case everyone goes to Standard Bank today and say, I want my money.
Yep.
They should be able to pay a certain percentage of that money that are liquid, right? Yeah, basically.
Nah, mate, this has been good.
Yeah, this has been good. I think this is wonderful. Look, I'm excited about the competition. You know, I think it's going to be amazing. And it's going to be really amazing. But nonetheless, guys.
Thank you.
From Nico and I, please enter the competition.
Yes.
Like, subscribe. But also, I think what we must add is that if you're not subscribed to our YouTube channel, you are not eligible to enter.
You have to subscribe. No, that's another layer.
So what you can do is that please make sure that you have subscribed. When you've subscribed, we will make sure, I think on the poster we'll say, look, your name, your full name. Probably that's what you're using on YouTube, right?
Yeah.
So we just need to match your name. Yeah, we just need to cross-reference your name and your YouTube so that we can do that. But nonetheless, thanks guys, and have a wonderful one.
Thank you so much. Bro, this was awesome.